Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bayzed Health Group Inc. Annual Report. Bayzed Health Group Inc. provides a wide range of businesses and services through its network of hospitals in China. At the core of their operations are oncology medical and healthcare services, which include screening, diagnosis, treatment, and rehabilitation. In addition to these essential services, Bayzed also offers hospital management services, ensuring that its facilities run smoothly and efficiently. The company also supplies various products such as pharmaceuticals, medical equipment, and consumables to meet the needs of patients and medical staff. Furthermore, through its subsidiary, Bayzed Healthcare Investment Group Co., Limited, the company provides investment and operation management services to hospitals in China. This comprehensive approach enables Bayzed Health Group Inc. to cater to the diverse needs of the healthcare industry in China. Bayzed Health Group Inc. maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Bayzed Health Group Inc. trades at a higher price-to-book ratio of 3.49 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are multifaceted, reflecting the dynamic nature of the healthcare industry. On the growth side, oncology revenue has seen a significant increase of 16.9% year-on-year, while level III and IV surgeries have risen by 20.5%. The adoption of standardization and digital intelligence, dual-engine model, has also contributed to revenue growth. Furthermore, the evolution of the business model from one-time treatment to lifetime value is expected to yield long-term benefits. However, on the decline side, several factors have contributed to a decrease in revenue. Hospital operations have declined by RMB 37.4 million, while pharmaceutical products, medical equipment, and consumables have seen a drop of RMB 21.6 million. The reduction in traditional one-time medical service revenues has also had an impact. Inpatient services have declined by 2.8%, outpatient services by 1.6%, and supply of pharmaceuticals, medical equipment, and consumables by 11.3%. Additionally, hospital management business has seen a decline of 14.1%, and revenue from others has decreased by approximately 66.7%. The net income of the company underwent significant fluctuations between 2024 and 2025. Initially, it decreased to RMB 190.8 million due to a decline in revenue from others and gross profit from hospital operations. However, this trend reversed in 2025, with an increase in net income to RMB 8,241 million, primarily driven by higher interest income and net foreign exchange gain. The company's profit margins also experienced changes during the same period. The gross profit margin decreased to 17.1% in 2025 from 17.6% in 2024, while the operating profit margin declined to 2.3% in 2025 from 2.9% in 2024. Conversely, the net profit margin increased to 1.6% in 2025 from 0.3% in 2024. The reasons behind these changes are multifaceted. The decrease in revenue and gross profit can be attributed to a decline in industry forums and conferences, as well as reduced hospital operations. On the other hand, the increase in net income is largely due to efficient utilization of funds, resulting in higher interest income and net foreign exchange gain. aim. The company's financial performance indicates a strong ability to generate cash from its core operations. The net cash flows from operating activities have been consistently positive, with a notable figure of RMB 122.3 million reported on page 2. This trend continues into the future, as projected for 2025, where net cash generated from operating activities is also expected to be around RMB 122,344. Furthermore, the net increase in cash and cash equivalents has been positive, reaching a significant amount of RMB 323,344. These figures collectively suggest that the company is generating substantial positive operating cash flow, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes over the past year. On one hand, total liabilities decreased by 9.3%, indicating a reduction in overall financial obligations. However, this decrease is contradicted by an increase of 5.3% in total debt, suggesting that while some liabilities were reduced, others increased to offset the decline. Furthermore, interest-bearing borrowings saw a notable rise of 12.3%, which may indicate that the company has taken on more debt with higher interest rates. This increase in interest-bearing borrowings could be a contributing factor to the 7.1% surge in interest expenses paid by the company. Overall, these changes suggest that while some aspects of the company's financial situation have improved, others have worsened, resulting in a complex and nuanced picture of its debt level and interest expenses. The company's management is optimistic about its outlook, citing increased net cash flows from operating activities. This positive trend suggests that the company is financially stable and well-positioned for future growth. Furthermore, management has outlined a new strategy focused on value creation, indicating a shift towards prioritizing long-term sustainability over short-term gains. This new growth trajectory is centered around delivering full-cycle oncology healthcare services, which will remain a core part of the company's operations. This commitment to a specific area of expertise demonstrates management's confidence in its ability to drive growth and success through focused efforts. Overall, the company's outlook appears bright, with management poised to capitalize on emerging opportunities while maintaining a strong foundation for long-term success. That concludes the financial summary for Bayzed Health Group Inc. Feel free to comment below, and I will be happy to answer them when possible.